I saw and I read your view on the indices, and by the way, I mean, we've now kind of broken below 19,001 again. Once again, you were of the opinion that the Friday's move was a quote unquote, not quote unquote, but a dead cat bounce. I mean, I'm not quoting you verbatim, but that's the inference that I drew from there. And you believe that 19,200 is the resistance, and we could arguably come off and retest the recent lows. Can you explain that?
Yes, Neeraj, I think I wish I had spoken to you a couple of weeks back, because right from 19,600, 700 levels, we've been maintaining a cautious stroke bearish stance for a while, because we just thought that everything came in together to suggest that the market did top out for the medium term at levels of 20,200. Whether you look at it technically, whether you look at it flows, whether you look at the sentiment, the kind of madness that the market saw at 20,000, the kind of vertical rally that mid caps and small caps had seen, I have not seen such a parabolic move in mid caps and small caps in a very, very long time. I think the last time it happened was probably 2007. And you had an environment wherein large caps, mid caps, small caps all did well at the same time. In the textbooks, it's written that when something like this happens is how you define euphoria. And I think that was really the best way to define euphoria. So I think we've been maintaining a cautious stance. I think this is a classical downtrend that we've got into. We will make a series of lower tops and lower bottoms. There are just too many headwinds that India and the world is dealing with at this point of time. You could talk about valuations, you could talk about risks around elections, you could talk about the geopolitical risks, interest rates, inflation, and with what global equity markets have done in the last 2 weeks. You know, it's not been a good space. Look at the Russell 2000, it's at a 52-week low. The Nasdaq, which was the outperforming market, has corrected quite a bit. The reason I'm bringing these global points is because it's very relevant to India. Till a month back, it was just a party for Indian markets standalone, and everybody thought that this party is going to continue forever. But we live in a synchronized world. We have to move together. The trajectory, the trend is always together. There will be phases wherein India will do its own thing, which it did for about 3.5 months, but thereafter it's all got aligned, and now India's outperformance in the global basket, I think, is done and dusted. So coming back to your point in terms of levels, I do believe that this downtrend will continue for many more weeks to come. I do believe that this support zone of 18,850, 900 will break, and eventually it will take the index down to 18,400, 500, which is a very important support. And we will review there, not to say that that's the worst case and we will stop there, but we will definitely review there. And the problem is there are just too many levels on the upside that will act as a ceiling. 19,200, 19,400, very important resistance, and I don't see that being taken out. The only positive as I see is the domestic liquidity. You know, the 16,000 crores coming into the system every month, that will in some sense protect the market from a collapse or a deeper fall. But barring that, I think the structure on an overall basis looks quite negative.